Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from SmartCon in New York City. Joining us for this segment, we have Nathan Allman. He's CEO of Ondo Finance. We're here to discuss what infrastructure is most critical for institutional grade adoption as tokenization expands. It is great to have you with us. Welcome to Trade Talks.
Thanks for having me.
You got it. So Nathan, let's learn about the inspiration behind Ondo Finance. What problems is Ondo solving in real world asset tokenization?
Sure. So we are first and foremost focused on making financial products and services more accessible, particularly to investors outside the US who don't have great access to financial products today. Our latest offering on the global markets is our tokenized stocks platform. You can think of it as doing for stocks what stablecoins have been doing for the dollar. So these are bare, like quasi-permissionless instruments that can be distributed really easily on crypto exchanges, much in the same way that stablecoins are today.
So then it enables access for tokenized securities worldwide. What do you think that means for investors and your global strategy?
In what way?
The capital markets piece that you had just mentioned, Ondo Global Markets. What does that mean for investors since we'll be able to access tokenized securities worldwide?
Yeah.
And what does it mean for your global strategy?
Sure. I guess I would bifurcate investors into a couple of camps, right? So there's the camp of investors in emerging markets who don't already have great access to these products, or their access comes with like very high minimums and they don't have a lot of money and that like doesn't make sense. So for them, the ability to just like buy and hold is really powerful. And then there's the more, like the wealthier investors in emerging markets that already have that ability to buy and hold very easily. And for them, the value proposition of tokenized stocks more so comes from the ability to use these stocks in DeFi. So as collateral for loans, for derivatives contracts, and in a financial ecosystem that doesn't really exist yet, but will be, will have a lot of the qualities that DeFi has, being 24/7, being very transparent, being very composable. But instead of being for crypto native assets like it is today, it will be for traditional securities. So that's going to come a little bit after. Like we're still very focused on the narrower access play in emerging markets, but it's very much an eventual focus of ours as well.
When you think about the benefit of tokenizing stocks and ETFs, how big of the opportunity size do you see?
So the long-term opportunity is like all of finance. I think,
right.
Blockchains are better ledgers, like, trillions, but the sort of tangible market size that we're going after for tokenized stocks today is, this sort of crypto native set of investors who, are on crypto wallets, crypto exchanges. It's sort of potentially in the low hundreds of millions of investors. And, that's really going to grow as we start to gain distribution into fintechs, who are starting to pick up stable coins today. Think of like, Revolut and Robinhood and folks like that. So it's only going to grow over time. We're very focused on crypto natives today, but we think that already presents, a pretty compelling market size.
And Ondo, you've selected Chainlink as your Oracle provider for the tokenized assets and cross-chain connectivity. How does this partnership strengthen your infrastructure?
Yeah, so the Oracle from Chainlink is a really important piece of the solution to make our assets robust collateral in DeFi protocols, right? Otherwise, protocols would have to rely exclusively on the pricing that we give them. And, they want some third-party guarantees, some third-party robustness, particularly in the event of, an outage so that, collateral doesn't get unexpectedly liquidated. So, really excited to have launched that with them, in the last month or so.
So let's think about this more broadly as tokenization expands. What infrastructure do you believe is going to be the most critical for institutional grade adoption?
Bridging is a big one. We had a pilot a couple months ago, also with Chainlink, where we made it possible for investors to go from tokenized deposits on JP Morgan's permission chain into tokenized treasuries on Ondo chain. We're going to continue to see a proliferation of more chains, particularly from institutions who often want to have their own chain. So like the cross-chain bridging infrastructure, is a really important piece of making on-chain financial transactions seamless.
Right.
Exactly. Yeah. Like, we still want instant or near instant transactions, even when they're cross-chain. And thankfully that's possible. So yeah, Oracle's pricing, I mean, even things like proof of reserves are very important for, providing transparency and, guarantees to investors on chain. We're working on building financial protocols that actually add utility to security tokens. So we built like a lending marketplace. We're working on a, perpetual derivatives marketplace as well. And those are ultimately what create this, this more transparent financial ecosystem that is the draw for tokenized stocks to be better than their regular way counterparts.
Yeah. So it sounds to me like we're moving beyond the efficiency conversation with this infrastructure and really extracting the value and what it means, as utility and ubiquity moving forward. So when you look ahead, how do you see tokenization evolving over the next few years? Are there milestones that would benchmark that success to?
Yeah, I mean, KPIs, we look at, number of users, number of distribution channels, like total value on chain. I mean, I think making sure that, I think it's table stakes that tokenized stocks are at least as good as their regular stocks. So like price impact, access to leverage, like really until we launched global markets 6 weeks ago, if you wanted to buy a tokenized stock, the price impact, as an example, to buy $100,000 worth of Tesla on, the previously leading platform, you'd have like 2% price impact versus it's like 2 bips in regular market. So like making sure that, we continue to deliver liquidity that is as good as traditional markets. And that's something we track really, really closely. That's going to continue to be really important.
Well, that'll improve with scale
Totally.
as well. Yeah.
Totally. And markets will become more 24/7 on chain. I mean, there's almost no weekend liquidity right now. Like that's an area that, hasn't been a huge focus yet, but I think at some point, like we're going to see, the formation of liquidity on chain that actually doesn't exist off chain yet.
Yeah. Yeah. Well, it'll certainly be interesting to watch how this evolves because the past year there's been a lot of developments, that's for sure. Appreciate your insight, Nathan. Thanks for joining us on
Thanks
Trade
for
Talks.
having me.
And thanks for joining me from SmartCon. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.